We are revisiting oil on TheStreet.com TV and in Wall Street Confidential, where we go behind what Main Street thinks about oil. Welcome, Jim Cramer.
Farnoosh, there's a just tremendous misperception about the oil stocks. Every time that we get $1 down in crude, $2 down, maybe $5 down, the stocks sell off horribly. What people realize is that there is a tension, a tug of war right now in the market. What do you do with companies that may not have up earnings, but are generate so many profits, so much money, so much excess capital, and they have to deploy it? And the answer is we have a lot of buybacks that go on all the time. The most real buybacks are the oils. So the stocks get hit on a couple dollars crude, and then we either get a quick spike in crude or we get news that one of the companies has, like Valero, that they think the worst is over, and then everything shoots back up again. What I'm recommending is a trading strategy. When the stocks are down, you buy them. When the stocks are up, you sell them. I mean, I'm not going to tell you just to buy and hold here. It's very interesting. It was a critical article about me. There are always, I find there's a great deal of critical articles about what I do on Mad Money. And the idea is that the consumer's basically stupid and watches it and does the wrong thing. And I have found that people who watch the show, I always question if it's losing your money, so much money, why are you an avid watcher? It seems counterintuitive. But I have been saying that there are some situations that are trading oriented, and they're undeniably trading oriented. And when you see these oil stocks down, even Exxon after reported a quarter that was so-so, it is your chance. I am not saying that about oil service unless it's deep water oil service, because that's where all the drilling is. But Chevron, Conoco, Exxon, this is a Marathon Oil, a repeated trade. Now, along with the major oils, we are now seeing, as we go into winter, the coal stocks and the natural gas stocks starting to do much better. Those two are now lumped into my analysis of buy on weakness. It is no sin to trade. There's a perception in the media that anytime you trade, you lose money. Now, that is so refuted by the vast majority of outperforming hedge funds. Then you say, well, listen, people can't be hedge funds. No, they can't be. But that doesn't mean that there aren't individual trades that can work for retail. When E-Trade and Ameritrade and Schwab report retail numbers, again, coming back to the notion of they are not going to constantly do things that are foolish with their own money, you'll see this is the kind of trade that people are doing. Now you could say, well, wait a second, when people go to Harrah's or when they go to Caesars, they lose money, and this is the same. No, those are games where basically you're not set up. The house is set up to win, with the exception of blackjack and some craps. This is not. There is no house that's set up to win here. You have trading opportunities in the market. I am saying that the single best trading opportunity I see out there, other than when agriculture gets hit, are the oils, and people should take advantage of it.
All right, so oil is a trading play.
Chevron, Exxon, Conoco, Marathon, I'll add XTO, UPL, BTU, and Arch. This is a strategy that no one is going to recommend other than in Wall Street Confidential, because frankly, people never want to recommend trading strategies because the rap on trading is it's a loser's game. I mean, I made $100 million trading, okay, and for the good guys. And I often wonder whether that was a fluke or not. It can't be a fluke if it's done year after year. Okay, so maybe I'm in the NBA and you're not. But there are certain aspects of trading that are layup versus, and I don't mean layup like it's going to happen, but I'm saying that there's a layup shot and there's a three-pointer. And the hedge funds can do three-pointers, they can do layups, they can do picks, they can do a lot of different things. But there are some shots that are higher percentage. And I'm saying that this oil trade, and I don't recommend a lot of trades on Wall Street Confidential. I mean, I recommend the whole logic as a one-time only, but this oil trade has worked now for 3 years, and I see no sign of it diminishing. So even though oil's now going to pretty much near my price target, 100, this strategy as a trade has worked. So I refuse to ignore it just because people in the media who have never traded who've never traded in their lives are saying that all trading is bad. Any strategy, anytime you ever say that everything is bad or nothing works, there are going to be exceptions. Oil's the exception.
All right. Thank you so much, Jim Cramer, for that. On Wall Street Confidential, oil, a trading play. Stay tuned for more of TheStreet.com TV.